Welcome to the Wealth Renegade podcast. I'm your host, Robby Butler. Have you celebrated your financial independence today?
On this episode, I sit down with Robby Butler to uncover what you should expect in investor relations. During this episode, you're going to get to discover what you should expect in investor relations. Now, for those of you who are new, I'm your host, Neil Timmins. I love passive income from real estate. Now, before I introduce you to today's Maverick, I want to make a request that at any point you like what you hear, well, give us a thumbs up. Be certain to subscribe to the show, never miss a valuable episode. And if you love what you hear, give us a written review. Plus, be sure to look at the description of this episode. We packed it with thousands of dollars in free resources. Now, today, we've got the privilege to learn from a person who essentially born and bred and raised in real estate syndication, raising money specifically. Prior to his career in real estate, he was in the philanthropy business, raising capital to help institutions there. Ultimately, it changed when he decided to get on the path to achieve his career and his goal outcomes. I would describe today's Maverick as someone who's passionate about helping people find their right path. Today's Maverick, I've got Robby Butler here with me. Robby, welcome to the show. Tell me this for the audience's sake. Who are you? Where are you from? What do you do?
Neil, it's great to be here. I'm from St. Louis, Missouri. I have been in various aspects of the capital raising space for my entire professional career, plus college, plus high school. Couldn't be more grateful for that experience because it's allowed me to be a very slow learner and still come out okay. I was a philanthropic fundraiser immediately out of college. That was the beginning of my industry, getting to know the sales process when you're working with investors and, in this case, donors. Loved that time. Moved full-time into real estate, ran my own business, had my own multifamily portfolio, business partners, contracting company, all very fun. But the syndication world called me and insistently called me. And so now I work for a mentor of mine in Y Street Capital. Y Street Capital does institutional quality multifamily. And among other things, I work in their investor relations department and we have a blast.
No, that's terrific. Well, there's a lot to unpack there. You give me a lot to work with. Before I go back where you started coming out of college, I want to jump forward a little bit to your first commercial transaction. First, sounded like it was perhaps multifamily. Tell me about the first commercial deal that you bought.
Oh my gosh. So there was a portfolio of 12 apartments in St. Louis, Missouri. They were C-class at best. Half of the tenants lived there half of the time. We identified that this was on a line, and this was on the far side of a line, which meant that we had a good chance with some quality ownership, with some quality management, to make a difference in a neighborhood that would also improve that area. And so we started working this transaction. And the first commercial deal, oh my goodness. I remember sitting there midway through the transaction going, if this ever happens, I will thank God every day because I am working so hard to make one deal occur.
Mm-hmm.
And so somehow it did. That was now almost 2.5 years ago. And holy cow, I've learned so much in that process, and the learning experience is worth everything.
Bring me current. Tell me about the most recent deal with Y Street Capital that you guys have done.
Sure. We are working through the completion phase of a storage fund. We have institutional quality multifamily, I mentioned, but also self-storage assets. And so we're raising funds for RV and boat storage, residential storage, and contractor yards all into one fund. If it sounds like a complicated concept, admittedly it is, but it's designed to create a diversified portfolio for storage investors across North America and across different asset classes. So you get these touches of different flavors of the storage experience. And I'm awed at some of the deals that we're able to put together. I couldn't describe a more awesome feeling to have a team behind you that's able to realize, all right, we've got this vacant land in the woodlands in Houston, and we can put 600 storage units in this spot, and no one else has thought of it. And I'm going, yeah, it's entrepreneurialism at its best.
That to go from where you started to where you're at now, and certainly the team you've surrounded yourself with has been, I can imagine, quite the journey. What are some of the biggest lessons that you had to learn along the way?
Thank you for asking. I made a misstep very early on in my real estate career. And that misstep was learning about some of the big things that I could be involved with, some of the teams I could align myself with, the experiences I could be having. And I said, all right, that sounds good, but I'm going to take a much more conservative, reserved step, and I'm going to delay figuring out how to get to that bigger space, that bigger playing field, to
Mm,
work with bigger assets, to work
yeah.
with better investors than myself. I always joke because it doesn't help anyone to look back with regret, but I always joke, I'm still running fast to make up for that 18 months of detour that I self selected.
Mm.
So, in terms of lessons, I do encourage people, if you're thinking 50-year timeframes, you're helping yourself. You're helping yourself stretch to go, where do I really want my investment portfolio to take me on a 50-year time frame? Because then we don't get stuck going, oh, yeah, but I could just flip a little house and I could make 15 grand. Wouldn't that be awesome? And you could spend your whole life making 15 grand and feeling good about it, but there's so much more to do.
Yeah, you're what I hear you saying is set that big monstrous the big mountain, identify that in the distance, and then do nothing but focus on that.
Right. Yep. Because you'll
Yeah.
grade yourself by every little step along the way. And that'll be productive because you'll go, okay, am I on my way to my real goal? Or is this an 18-month detour that I did?
One of the things that I think is unique about you, you take a lot of ownership in terms of how you speak and how you take responsibility for really your process and your life. Have you always been that way, or is that something you learned over the years?
It is something I pay attention to a lot. Things occur. So, real estate's not all sunshine and rainbows, and no one should ever think that the path of an investor is straight uphill. We've got three different various degrees of severity legal cases going on right now for various issues throughout my own personal portfolio. And yet I look at them and go, what could I have done better to not have gotten into this problem? How could we have reviewed our contracts with more accuracy? So it's something I'm always working on to say, what element did I not grasp of this whole experience that I should improve upon to not stumble on the next time? So that is something I pay a lot of attention to.
Constant learning
Yeah.
and constant improvement in the same way. See, what did you have to learn? And maybe the team structured in such a way where it's not tremendous, not a heavy lift for you. But what did you have to learn in terms of going from apartments to a different asset class?
Thankfully, what you said is correct. Not a ton, but I did have to recognize that there are times when an investor wants a straight answer. And there are other times where you should go and get more information for them. And there are times where the necessary responsibilities of the team means that everyone has to have a general concept of what we're working on. So, as an example, I have not known anything about development, but now most of the opportunities I raise money for include development. So I had to learn a lot very quickly. Read a whole book on the subject just to get the terminology familiar enough. Because then investors call and they go, okay, so entitlements are at this stage. And so what's the conversation with the city council like right now? I'm able now to speak a little more eloquently, but in the past, not a familiar experience. So there was a steep learning curve for the assets. But when an investor is considering an investment, the investor relations person should be doing the listening. And so it is often so helpful to remember, if I'm doing 70% of the listening in a conversation,
Mm.
I'm doing the right thing. So I shouldn't need to be prepared for a 45-minute speech on the latest self storage deal. I should be able to listen.
That's interesting. And let's talk about investor relations, because I think so many people have, and a number of people that I know in industry have the opposite opinion that you have and that I share with you. It's about pitching. And the more you tell, the more you sell. Yeah, I know the old school. And I laugh just like you because I know it doesn't quite work that way. So maybe at a high level, talk about what is investor relations, really what that means for folks.
Sure. So, talking directly to the investor, you are bringing something essential to the business that you're considering investing in. You should treat yourself as if you have all the agency in the world. You have all the time in the world. There is no pressure. There is no need to be in a rush to do anything. And if you have more to learn, you should go ahead and learn it. The investor sits in such a position of value to the company that they should treat themselves that way. So there's a self actualization process that I always remind people that's where it begins. You are making an investment for you. You're not making an investment because my self storage deal is really good. This has to go back to you and what you're listening for and how it's going to benefit you. So that self awareness is essential. And it means you need to have a little bit of a vision for your portfolio. So what I'm looking to do as an investor relations person is hear that from you. Get them to speak, get the investor to speak about what they want to accomplish with their money. And once I have that, then I can know honestly if our deals, if our opportunities are a right fit for them. And if we're not there, yeah, some people might throw money at an opportunity, but if they're dissatisfied a year from now, that's just as much my fault as it is theirs.
Yeah, you've got a responsibility. You sit in a position ultimately where you've got an absolute position of responsibility for both the company, your team, and the investor. And oftentimes, what that means, it works fantastically well when those are aligned.
Right.
Otherwise, if they're misaligned, as you said, they're misaligned today, they're going to be misaligned every period of time from now in the future. And you typically go from bad to worse.
Right. So I mentioned that in an investor meeting, investors should be doing the majority of the talking. I should be doing 70% of the listening. But for the investors' confidence, which they should have all the confidence in the world because they're sitting there with a free choice to make, the investor should know there's not a stupid question to ask because if they don't ask it, they're not going to make progress as an investor. They might get lucky, but until they learn some of the things there are to learn, that is another piece that the investor relations responsibility sits very squarely on our shoulders to be able to answer and educate as people are considering where to put their capital. A story I'm very fond of telling, describe this literally because it's amusing in this way. A doctor with a lot of capital to put to work. He is reviewing an opportunity. I'm talking with him. I'm listening to his goals for his capital, what he wants to accomplish with his money. And then so he starts to ask some questions and I'm happy to answer. And so he's asking these thorough questions. And then the very last question is, again, someone with a lot of capital, so holding his own weight, knowing his own confidence in that. And he goes, and is this investment held in an LLC? Which is a very amusing question because of course it's held in an LLC. And if it's not, you should be running away.
Sure.
But it's not a stupid question. He should absolutely check and he should verify and he should understand the ramifications of that. But if he doesn't know, he should ask. And then we can talk about why it's in an LLC, the ideal structures for syndications, et cetera, et cetera.
Yeah, no, that's interesting. And you're right. There is no such thing as a wrong question. It takes an investor, call it a stupid question. It's only a stupid question once. Right? And so oftentimes it's asking that, it's educating oneself as people have questions, converse with you, they converse with any other opportunity that they come across.
Right.
They just progress up their journey down that investor path and get sharper or more skilled the more conversations they have.
Right. There's a barometer that for our investor listeners, for the Mavericks out there, I would say is always a good litmus test for how your first conversation goes. If you feel a quality, genuine human connection with the other person, that's a good beginning. It is not everything. And you need to go and learn. Well, what are the other, let's call it 90% of things you should find. But if there's a genuine interest in you as an investor, that's a very good beginning. And at the same time, you also have to recognize, oh, the genuine human connection is also a function of who you are. And so there needs to be enough self-awareness to realize, yes, perhaps if you and I being in the Midwest, we approach our conversations and we approach our processes for bringing investors on board separately or differently than perhaps our New York sponsors who are a much different approach, a much different style.
Right.
So the investor needs to recognize, yeah, am I working with an East Coast hard driving syndicator? Well, that'll be a different style. And yet they still should be interested in you. There are basics that if you don't feel that, well, that means your next investor relations call after you put $250,000 work with them is going to be the same way. You're going to have to work with that person for 5 years, 7 years. Do you want that? Is that the person you want to call when you have questions? Maybe, maybe not.
Are you a passive real estate investor seeking financial freedom? Well, today's market's unique and it's ever changing. Now is the time to get educated on how to strategically invest in commercial real estate for long-term financial freedom. Grab your copy of How to Passively Invest in a Changing Economic Environment. Go to www.mavericks.invest.com. Let's talk about that 5 to 7 year time horizon and maybe in a shorter time frame as well.
Sure.
What's your communication plan look like? How does that work on an ongoing basis for folks?
So as the relationships grow, I learn very individually, what does this person want? What's their preferred communication method? Because I'm able to sit in this seat and other folks have other responsibilities, it's very intentional for me personally. So I'm listening to an investor and saying, all right, does this person enjoy talking on the phone or on Zoom? Do they enjoy meeting in person, but perhaps not email? And the whole communications plan gets built around their independent experience and how we can best add value to them. Do they like learning? Do they want to be left alone for a year after they invest? All of these things occur. But in general, if I'm talking to someone every quarter, I feel I'm doing at least something good to keep the relationship alive because, especially if they've placed capital, they need to know they invested in a syndicator, in a private placement opportunity because they didn't want 50 layers of Wall Street obscurity in between them and their money at work. They wanted to work through individuals they trusted to
Mhm.
have outcomes that they believed in. So it is individual, but you're keeping a relationship warm. I call my mother frequently and I call my investors frequently as well.
So they passed the test. They've talked to a investment relation manager. They seem like there's a connection. There's some genuine interest. So now on to the next 90%. So let's talk at the GP level first, and then we'll go to the deal level next. At the GP level, the general partner, the person, the team, what should they be looking for in that team to go green light, red light situation?
Some things that come to mind first are, of course, their track record. Are they truly transparent about every single element of the deals they've done? Will they share with you both core financials and also the story that goes behind the thesis they select the property, the investors they brought along? This may mean that you're having some thorough conversations with people, but it is worth it. You can ask them, how often do you visit the sites of the places you're building or the apartments you own or the triple net commercial deals or the industrial facilities that you own? How often are you literally on site? So asking about the track record and going through the investor, or rather the general partners closeness to the deal is a good question. Then going into the team, okay, how do they select the people around them? So not only what happened to them in the past and how did it inform what they're currently doing, but who's around them? And do those people have the same vision and values? Are they all rowing in the same direction? Is there a way to be insulated from the individual risks of having one syndicator driving the whole deal? Do you have backup in case you make a mistake and you can have someone else who spots it? I'd say the final piece that's essential to know is value standpoint. Does this person align with you on a values basis? I think every mistake I've made has been because I didn't really understand the values of the person I was working with. And sometimes it does take years to get it out. But to really understand that is a critical piece before you start throwing money after sponsors who can produce good returns for you.
Yeah, no, I think that's tremendous. There's a lot of nuggets there and a lot of things to add to the checklist to be able to identify as you're going through and evaluating this. Take me to the deal level.
Mhm.
So I'm in with the sponsor. So my jockey passed the test. Now on to the horse, the actual deal. What are some red flags or back to the red light, green light to go? All right, maybe this is one that aligns with me, but what kind of questions should I be asking about that particular deal to uncover or reveal something that might not be aligned with my intent for my capital?
Yeah. If they can't immediately share their thesis for why they're doing
Mm,
the deal they're doing, then what do they have to orient around when the going gets tough? If they're not knowing, as an example, that this multifamily apartment is about stability, it is sure rents, it is in a good marketplace, et cetera, et cetera. Well, then when things get hard, how do they know they're really performing according to market or performa, et cetera? So the basic thesis should be on the tip of their tongue. I also, in terms of track record for the specific deal, I like to look and go, have they done a deal exactly like this before? Sometimes that's hard. But if you can see an 80 or 85% comparison, perhaps as an example, yeah, we haven't done a 600 unit storage facility, but we've done a 500. Okay, I can see that as being a realistic next step for this indicator. People can make ginormous jumps in growth successfully, but that doesn't mean that your capital has to follow them while
correct.
doing it.
Yep, there's no doubt about that. Say, as you look forward to 2024, what are you most excited about in the year?
I am excited to see where, I guess this is a personal answer first. I'm excited to see where Y Street's investors start to get excited about. I think it's been 6 months of uncertainty,
Mm,
and uncertainty is not fundamentally a problem unless you make it one. You want to provide things that people are certain in and you listen for what they're certain in. And if it's nothing, you go, okay, we can try and help you find some stability that's with a specific asset. Perhaps that's with their relationship to God, whatever it's going to be to find some stability that can be helpful. But I'm very excited to see as we continue to work with our investors, what do they find that's going to light their fire? The three main opportunities that we offer. Additionally, I am excited for some of the lessons that come out of challenging real estate markets once you're able to see them with some perspective. I think we've been in one for the last 6 months. I think the general economy is trending that way, but you get perspective and you start to learn very rapidly the things that you may not have known emerging or growing into it. So even a little bit of perspective on the last 6 months will be a huge teacher for me. And so I'm excited about 2024 for that as well.
It's going to be a fun year. Looking forward to it.
Yeah.
Let's just, I want to move on to the final segment, what I call the final four. What do you think holds most passive investors back from hitting their personal next level, whatever that happens to be?
What holds investors back from hitting their personal next level, I think, is a lack of vision about what that next level looks like. A very clear, written down, and it has to be written down. And if you're listening now, if it's not written down, it is not real enough to you. But getting that level of clarity down to the colors and shapes or down to the way you feel when you're at that next level, if it's not that clear, it's not happening at the speed it could.
What are you passionate about outside of real estate?
I tipped my hand a little bit with that. I am very passionate about my religion and my relationship with God. It catches me off guard every time I wake up in the morning and go, what am I going to do first? And then I'm reminded.
Yeah. Your favorite book?
Oh, that's a good question.
Pass the Bible. We're going to call that is it, but pass the Bible.
I would go perhaps with either Catcher in the Rye or something else that's coming to mind, but I'll have to think about it. I'll put it in the show notes with you.
Yeah, great. Your favorite way to make an impact in the community?
I do like getting my hands dirty. I will get the shovel and show up with folks out of my business network and go and clean out beds on the city walkways. I like getting my hands dirty.
Yeah, that's great. The Maverick Vault, it's a collection of resources available to you, our listeners, and Robby, you're making a contribution to the vault. Tell us a little about what that is.
Sure. For you, the passive investor, there are places where you can go to get objective advice. And I would love to show you every single one of them. Briefly, that's things like Left Field Investors and their fantastic book they just published. I think it's called Overcoming Rookie Errors as a Left Field Investor. Great guide to skipping things that can cause you some early growing pains as an investor. I would also say, go join Real Estate Limited Partners on Twitter, or X as it is now referred to. Community, 1,000 people, all of them limited partners in real estate. Go see what they're saying. I think probably the last quality network is groups like the Family Office Club, which for our passive investors can help them think, who do I want to be like? Perhaps I want to have my own family office and my own institutional style structure for my family investment. Neil and I were talking before the call, and to be able to have a trusted place for the passive investors to go check on deals, think about things objectively is critical, because we'd much rather have someone find a good relationship out of that than stumble into some Ponzi scheme and lose $200,000, $400,000, $700,000 because they were misled because they didn't have a community protecting them.
Yeah. No, that's a wonderful contribution. The summary of resources to be able to point people to essentially your top list of resources at the current time. We appreciate that contribution. You guys can pick it up at www.themaverickvault.com. Robby, it's been a wonderful conversation. I sincerely appreciate your time coming on. And I think you've got a wonderful breadth of experience, and what you've shared relative to an investor and what they go through when evaluating a new relationship and how to be mindful of that, and the types of things that they want to be cognizant of when they're talking to somebody new in a new relationship to be able to best that relationship and then ultimately that general partner. It's a wonderful contribution here. It's been a great conversation. For people who want to find you, Robby, they want to follow you, they want to connect with you, where can they go? What should they do?
Thank you. Email me anytime, Robby@robbybutler.com. That's ROBBY. Thank you to my parents for putting it that way. Also, find me on LinkedIn because I share some of the both personal lessons and the institutional lessons that we're learning at Y Street Capital and the things that I'm reflecting on as I'm going through this day-by-day experience. Happy to see people there and always happy to talk on the phone at any point. So reach out to me, email or LinkedIn.
LinkedIn, the email are below in the show notes. Robby, thanks for the time.
Great to see you, Neil.
You too. To our listeners, pat yourself on the back. You guys have made it to the end of the show, and most people never finish what they start. If you receive value from today's show, be sure to share it on LinkedIn, your Facebook page, or your social media platform of choice. Subscribe to never miss a valuable episode in the future. And if you found value in today's episode, give us a thumbs up with a positive review. If there's a particular topic you'd like to hear about, well, I want to hear from you. Shoot me a message on LinkedIn. The link to my profile is below in the show notes. You can connect with me there for more valuable content.